$750 billion. That is what 5 tech giants are spending on AI this year. I analyzed every dollar. 5 companies are spending $750 billion on AI infrastructure this year. Alphabet leads with $190 billion. Microsoft at $160 billion. Amazon at $150 billion. Meta at $120 billion. And Oracle at $80 billion. To put that in perspective, that is more than the entire annual defense budget of the United States. And it is all going to one thing: AI data centers, chips, energy. This is the biggest infrastructure build-out in technology history, and it is accelerating every quarter. The scale is unprecedented. Each data center costs between $3 billion and $10 billion to build, and they are building dozens of them simultaneously. Before we dive into each hyperscaler, look at who benefits most from this spending. The chip suppliers. NVIDIA at $213, up 3%. NVIDIA is selling every H100 GPU and Blackwell chip it can manufacture. Broadcom at $396. Their custom chip deals with Google and Meta are worth billions. And AMD at $555. AMD is the dark horse with their Helios racks winning Microsoft and Oracle deals. These 3 companies are the gatekeepers of the AI infrastructure build-out. Every data center needs their chips. Every hyperscaler budget includes their products. Alphabet is spending the most, $190 billion in projected capital expenditure. That is up from $75 billion just 2 years ago. That is 2.5 times growth in 2 years. Where is all this money going? Google is building 16 new data centers this year alone. Their Tensor chip program costs $10 billion annually. Cloud revenue hit $43 billion last year, up 35% year over year. But here is the critical number. Alphabet's Capex is now larger than its entire cloud revenue. That means they are betting future revenue will justify today's spending. If exponential AI demand does not materialize, this is a massive financial overhang. Alphabet shares are at $346, roughly flat today. The market is watching this quarter closely. Microsoft is not far behind at $160 billion in AI infrastructure spend. Their bet on OpenAI is the defining partnership of this decade. Microsoft has invested over $30 billion into OpenAI. In return, they get exclusive access to the most advanced frontier models. Azure AI revenue is growing at 150% year over year. GitHub Copilot alone generates $2 billion in annual recurring revenue. But Microsoft faces the same structural risk as Alphabet. Their Capex is growing faster than the revenue it currently generates. The payoff is years away. Wall Street is watching every earnings call for signs that this spending is translating to top-line growth. Microsoft shares are at $387, down 2.6% today. The market is questioning the ROI timeline. Amazon and Meta are taking completely different approaches. Amazon is spending $150 billion on AI infrastructure through AWS. Their custom Trainium and Inferentia chips are designed to compete directly with NVIDIA. AWS AI services revenue grew 90% year over year. But Amazon's e-commerce margins are under pressure from Temu and Shein. Amazon shares are at $242, down 2%. Meta is spending $120 billion, mostly on NVIDIA H100 GPUs to train their Llama models. Meta is unusual. They open source everything. They spend billions on research that competitors can use for free. Mark Zuckerberg is betting that open source AI creates an ecosystem that benefits Meta's core advertising business. Advertising revenue was $160 billion last year. Meta shares are at $626, down 2.7%. The market is split on which strategy wins. Here is the surprising part. This massive spending is backed by real earnings growth. S&P 500 technology earnings are up 61% year over year. The overall S&P 500 is up 23%. But look deeper. Technology and energy combined drive 80% of all earnings growth. That is an extraordinary concentration of profit generation. Financials grew only 9%. Healthcare at 8%. Consumer staples at 3%. This is not a broad market recovery. This is a two-sector market hiding behind a healthy average. NVIDIA alone added more earnings in the last quarter than most companies generate in an entire year. But here is the number that keeps me up at night. Valuations are higher than September 1929. The only comparable period in history is the dot-com bubble of 1999. Earnings are real and growing, but the stock prices assume absolute perfection. Any disappointment will be punished severely. The tech sector is down 9% since June, after rallying 45% from the March low. That is a classic pattern. Euphoria followed by doubt. Global AI spending is projected to hit $2.52 trillion this year, according to Gartner. That is up 44% from last year. AI-linked companies have gained $27 trillion in market cap over 3 years. That is 36% of the entire United States stock market. The last time we saw concentration like this was 2021. Tech stocks crashed 40% that year. The Nasdaq fell from 16,000 to 10,000. Today's valuations are even higher than that peak. But the fundamentals are also stronger. AI is generating real profit and revenue today. The question is whether that revenue can grow fast enough to justify the current multiples. The bulls say yes. The bears say we have seen this movie before and it never ends well. Here is where each hyperscaler stands today. Alphabet at $346, Microsoft at $387, Amazon at $242, Meta at $626, and Oracle at $125. Every single one is spending record amounts on AI infrastructure. Every single one is betting their future on this technology. The market cap of these 5 companies combined is over $8 trillion. That is roughly 20% of the entire S&P 500. Never in history have 5 companies controlled this much spending power. The concentration of both capital and risk is unprecedented. 3 key numbers that summarize this entire story. Number 1. $750 billion in hyperscaler Capex this year. That is a floor, not a ceiling. These companies are locked into multi-year data center leases with cancellation penalties. They cannot easily cut spending even if demand slows. Number 2. $2.52 trillion in global AI spending projected for this year, according to Gartner. The infrastructure build-out is just the beginning of a multi-decade investment cycle. Number 3. 61% tech earnings growth year over year. The fundamentals are real and measurable, but they are concentrated in a handful of companies. The rest of the S&P 500 is barely growing at all. If you own the index, you are effectively making a concentrated bet on technology and energy. Nothing else is contributing meaningfully to earnings growth. The pick and shovel plays like Nvidia, Broadcom, and data center REITs may be the best way to participate without betting on any single hyperscaler directly. Which company is best positioned for the AI infrastructure boom? Google spending the most, Microsoft with OpenAI, or the pick and shovel plays like Nvidia and Broadcom? Drop your take in the comments. Subscribe for daily AI finance analysis. The data does not lie. See you in the next one. This video is for educational and entertainment purposes only. It is not financial advice. Past performance does not guarantee future results. Always do your own research and consult a qualified financial advisor before making investment decisions.